Can you take us through what you feel the market is giving you right now? Is it a general sense of optimism, or are you feeling more cautious?
Dom, so it's right in that optimism with some caution. What we're seeing is that we're concerned about the bank credit contraction impacting refinancing into 2024. We're also concerned about the potential spread of global conflicts in Israel and Ukraine. The Fed is still going to be data dependent. Later this morning, we're going to hear about the unemployment rate, and we feel that it's going to be flat at 3.9. The core inflation is declining, but still above the Fed target. So we're seeing that this is going to be a soft landing. We're probably going to see easing in 2024 or 2025. But we still believe that earnings expectations and revenue expectations drive stock prices. We're still continue to see analysts increase their estimates for healthcare, financials, and technology.
So increasing for certain parts, but then decreasing on some of the macroeconomic fronts. Take us through your word of the day, speaking of the economy, and why it is.
The word of the day is deceleration. The Fed is winning the inflation battle.
Okay, so if that's going to be the case, and you mentioned those three sectors that you think are still poised for at least some outperformance, why is it that those particular moves in those particular sectors, given the macroeconomic environment, are the ones that you would focus on the most? I speak only because it doesn't seem like you're mentioning certain parts of the overall market, like artificial intelligence. Are you going after NVIDIA or Microsoft or mega cap technology because of those trends? Where else are you finding some of those big momentum trades or value-oriented trades?
Well, what we're seeing is that as the interest rates come down, those assets that have longer duration are going to get a lift. And so that's what we're seeing now. And we believe that's going to continue into 2024. So that will be our focus, those assets that have longer duration.
Now, with that in mind, there are parts of the market right now that have staged a bit of a comeback after being beaten down pretty badly. I look at things like airlines and travel, other parts of the market, perhaps consumer staples, trying to find some kind of a footing. Is there a commonality about where you think we could see the biggest bounces for some of the places that have been beaten up the most in 2023?
Well, what we're seeing is that where are the analysts increasing their estimates, particularly in revenue? And what we're seeing is that staples is still actually coming down in estimates. Also, we see utilities coming down and materials. So we're still seeing that those sectors are going to be weak going into 2024. Once again, those sectors that get that increase in estimates, particularly in revenue, will be healthcare, technology, and financials. And so we're seeing those sectors performing well going into 2024.
And Degas, before we let you go, what's your top pick on your shopping list for 2024?
Yeah, it's Universal Display. It's a technology firm benefiting from the transition of LCD to OLED screen technology for smartphones, laptops, and PCs. OLED technology has higher contrast, faster speeds, uses less power. Also, it has invested, the company has invested about 21 cents in research and development for every $1 revenue.